Markets looking to start the new week with some gains, 178-point gain on the Dow futures right now, as concerns over a trade war with China ease a little bit. White House officials helping tamp down those fears on the Sunday shows yesterday.
Just technically, we have taken no action. It's a long process. There's several months here. So far, no tariffs and no action has been enacted.
I don't expect there will be a trade war. It could be, but I don't expect it at all.
President Trump tweeting this morning, when a car is sent to the United States from China, there is a tariff to be paid of 2.5%. When a car is sent to China from the United States, there's a tariff to be paid of 25%. Does that sound like free or fair trade? No, it sounds like stupid trade going on for years. Joining me now is Investmark Advisory Group Principal Michael Lee. Mike, what's going to keep these trade concerns in the background for investors? The start of earnings season, potentially.
I think this is going to be one of the best earnings seasons we've ever had, right? Not only from the actual results, but you've got to remember that earnings are a forward-looking tool, and that's what matters. I'm sorry, stocks are a forward-looking tool, and so what earnings are going to look like for the rest of the year and then going out to 2019, and when we start talking about 2019, I think a lot of people are going to sit back and say, wow, you know what, stocks are actually really cheap. They're not expensive. We're looking at one of the kind of the greatest growth periods we're going to see in our lifetimes.
But what if we do get into a back and forth, a tit for tat with China? Again, you heard from Larry Kudlow and Secretary of the Treasury, Steve Mnuchin. They're trying to, like, wipe away some of the fears, like, oh, this might not happen. But again, I just wish some of those guys would call people I grew up with, hog farmers and people who grow soybeans. That impacts the real American economy. That's what the market is reflecting, that the economy might not be growing as fast and earnings might not be growing as fast. Look at Boeing and Caterpillar last week.
So a couple of things, right? If you run a small business and your input costs are about to go up 20 or 25 or 30% based on some tariff, like this can be terrifying for you. However, on a larger scale, what can China really do to us that they're not already doing? What are they going to steal our intellectual property? I mean, the trade imbalance from China, our trade deficit, we're annualizing at just under $400 billion this year. Okay, that is a much larger portion of their GDP than the $150 to $170 billion that we export to them every year. Again, problems for people whose input costs are going to go up. Our economy as a whole can withstand a trade war much easier than they can. The standard of living in China is nowhere near as high as they make it out to be. So if China gets into a trade war with us, chances are they'll go into a recession. If they go into a recession, there's a good probability of a popular uprising. So the only way that the Chinese government could go out of power is by a recession. So their government props up their economy. It's held together with duct tape and elbow grease. So I'm saying this, but people much smarter than me, much more powerful than me know this. So what we're seeing is a lot of posturing. So I don't any sell-off because of trade war fears, I think, is a good buying opportunity.
Totally agree completely on that, because I think what you're seeing in the market, though, is you get these headlines and you're getting these big whipsaws back and forth. And I think that's fine for the professional traders, but for the people at home, they could really get hurt in trading this type of market. I believe a lot of those whipsaws have to do with computerized trading, with the algorithmic trading. So they're pulling headlines, and then you're seeing these big drops in the market or these big rallies in the market. And I think it's important and I love your take on that, a huge portion of the volume out there on a day-to-day basis is computerized, so individual people at home can really get hurt trying to get in front of that.
Yeah, I'd say for people over the last couple of years, the market's too high, the market's too high. Well, you know what? Every time you see an ugly tweet or an ugly headline or Stormy Daniels or something the market's going to sell off, here's your opportunity to take some of that cash and buy some stocks.
I hope it doesn't sell off on Stormy Daniels. But go ahead.
Yeah,
I hope investors are smarter than that, or the computers.
If you start drilling down and looking at the U.S. economy, durable goods are up year over year, almost 9%. It's the highest number since the early 2000s. You look at manufacturing's doing the best since the early 2000s. Non-ISM manufacturing is the highest level it's been in 20 years. You look at the job market. Weekly jobless claims have been below 300,000 for almost 3 years. Longest period in almost the history of the entire United States.
Real quick, earnings season starts this week. JP Morgan, kind of the big one coming out on Friday. What do you expect? Overall growth for the quarter, 17%, but J.P. Morgan expected to put up even better numbers.
What I'm going to be looking for is the forward guidance. What's dragged a lot of these banks back, particularly, is sales and trading, and now with the return of volatility, I think sales and trading has kind of been the laggard as you look at all the different business units of all these banks. It's going to start to get better, and then with the banks, as rates are going higher, their net interest margins are going to expand. As net interest margins are going to expand, banks are going to make a lot more money on their loans. And let's face it, 10 years ago, when the banks were in their heydays, they were trading shops. Now they're back to being traditional lenders. So when you have $1 trillion of loans out there, you make an extra 25 basis points on each loan. It's a lot of money, right? So the forward guidance is what I'm looking at. And as soon as the conversation switches from 2018 earnings to 2019 earnings, I think people are going to say, like, wow, stocks are really, really cheap. Something's going on here. Like, the market's going much higher.
Michael Lee, thank you, sir. Good to see
Thanks
you. Come back
guys.
soon.
Okay.